Good morning, everybody. It is August 16th, 2024. My name is Luke, and we just had a pretty good day on the stock market trading NQ. I'm going to walk through the two trades I took, one red and one green. Let's get into it. So what I like to do first is recognize the prior day structure. We have a macro red swing on the overnight in London session. So overnight red swing. Then around 5:30, we see this market structure change. We put in 2 lows, 3 lows, and we can kind of create this support level right here. And I identify that. So from that point on in the day, I'm looking for longs, but also keeping in mind that we can swing down because we have that macro level. So I usually identify a market structure like this. I say, okay, higher high, higher low, higher high, higher low, higher high, higher low, blah, 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 blah. And I can tell that it is, we have market structure that is bullish. So then I look for entry methods. Right here, I saw this flag form, and I took this was my first trade. I got in when it broke the flag. I set my stop to the low, which in retrospect, you could have said, hey, we do have this liquidity down here. I'm just probably safer putting it down here. But if I'm looking at the probability of it, usually a bull flag or a bear flag, it breaks out immediately and you don't really get that retest. So that's why I had my stop so close. And I set it for a 1-to-1. We came up about 23 points, but $23, excuse me. But we didn't get there. It was 117 points. And we got stopped out. That was the first trade. Then I kind of understood we had this higher low right here that I marked out right here. Let me draw. We had this higher low right here, and we kind of broke and swept that. And I was like, okay, now I'm kind of looking for a bearish model. Right. And what I could have done, I didn't do, because once you lose a trade, you kind of want to be a little bit more cognizant of the trade setups you're taking. Are they A+ setups? Are they the best setups? And I saw this bear setup that probably would have hit. This flag is a very I'd probably give this a C- setup, because we swung this. We're still bearish because we didn't totally take this lower high, you could say, if you look at it like this, because we had the change in structure when we broke this higher low. So I honestly could have taken a short right here, set my stop right here, and it would have hit. We would have been another green, another 20 points. But I was just waiting, because when you realize you're in this, I want to say, consolidation zone that kind of starts at 6:30, right? We bounce on, we bounce off, we bounce on. I was just waiting for something a little bit bigger. And we did have news at 10 o'clock. And that news was clearly positive. So let me draw that for you. So we have the positive news, and I see this bull flag form, and I also see we got that resistance line right here. And if you look at it retrospectively, we want to fill the gap that the London session and the overnight sessions filled. So I took a long when structure broke the bull flag right here. I set my stop to the previous swing low, and I set a 1-to-1. That's simple. And we made 199 points. So we lost 117 points on the first trade and won 198 points on the second trade. For just your knowledge, I trade think or swim. I trade options because I'm better at options right now. I could trade futures. Futures are a lot easier, but the capital requirements and the infinite loss kind of steer me away from that. So I do trade naked options. You can see both trades I took. I got 8 calls at 94 and I sold them for a loss at 72. And then I bought 8 calls at 98 and sold them for a win of $1.27. So we're green. Just for your information, if you don't know, options are correlated 100 times 100. So if an option contract says $1.27, it's really worth 127, right? And the options allow me to still have that high percentage fluctuation that futures would have, but with limited risk. But I also have to deal with all the Greeks and thetas that come into play. I usually buy a $2 out of the money call because it has a good balance of delta increase when we approach. And if the trade would go bad on me, right, the delta is going to decrease the farther away it goes. So also my stops are a lot better. That's it, guys. Those are my trades on August 16th, 2024. I just started this new series, and I also started a new strategy that I've been working on for a while. And second day trading it yesterday, I kicked myself in the leg for not taking a trade I should have, because I was scared. I really wanted an AA plus setup, and it was probably a B plus. I probably should have taken it, but I didn't. But today was good. We came out green. That's all that matters. We stayed level-headed when we had the first red trade, and we looked for a clear A plus setup. This is probably an A minus setup because the news had a play into it. The gap fill, the approaching VWAP that we could take support off. It beautifully, if you can see, it beautifully creates support of it. Right, we first hit it. We come down right here on this candle, then we break through, support, and that's how we do it. What is funny to me is now we have this double top up here, and I'm not going to take this trade, but this would probably be a change in structure for me, and I would most likely look for probably a bear flag that's going to look like something like this. We're going to take the short 22 points and target that. That's probably what's going to happen. If not, we're going to break out. We're going to retest this level, consolidate, and then bounce to reclaim that liquidity from the London session. But that's it, guys. I'm going to be posting more videos like this explaining the day trades I take, the strategies I use, and I'll see you in the next one. Stay tuned.